Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 179. Now, today we'll talk a little bit about human behavior, why Trump is saying the little pain in the stock market. So we'll discuss this. We'll also talk about potential recession, bear markets, what to kind of look for, and some insight. We'll look at Zuckerberg testimony and the whipsaw action that we're having in the marketplace. So these are some of the things that I want to share with you, but keep in mind this is just my opinion on these things. When I look at things not only from an outer perspective of, hey, what's happening, but it's not just a one-to-one cause and effect. A lot of people that may be watching this video, they may think, hey, because it's this thing that's happening in the marketplace, the market does that, okay? Because one thing is said, it's a one-to-one linear cause and effect relationship, and the market doesn't work that way. There's always multiple things that happen to create and lead you to a certain event or an issue, a problem, whatever it may be. Maybe a car accident. You may think, hey, it's one thing that caused that car accident, but usually it's multiple things. It could be the bald tires. It could be that the car is not running well. It could be that there's a cat ran in the road and then a second person moved over. So there's usually multiple things that create and lead to a cause and effect relationship. It's not just a one-to-one, and the marketplace is no different. So I want you to understand that what I drive and what I look for in the marketplace, really for me, my core decision is based on the numbers and human behavior. So I look at the numbers based on statistics, based on what's happened in the past of history, and then I look at human behavior, how humans behave and react. And that's what we'll talk about here in this video. I'll give you some insights on some of these news stories, and then we'll look at some charts. So keep that in mind as we go through some of these things. So first things first, I want to talk a little bit about, Trump says that there may be a little bit of pain as U.S. and China trade tariffs. There's threats going on, of course, back and forth. And that's why the market is volatile, going up and down, up and down. There's a lot of whipsaw action. But the thing is the reason he says this, again, look at human psychology, behavior. Why would anyone really say this is that there's pain? Because they're trying to prepare you for a justification mechanism in your mind to say that, hey, yeah, we're going to have some pain in the market over the next month or two or four. But then that way, for the long haul, it's actually going to be better off for you. The reality is that's not the case. Once the pain starts to kick in, it usually accelerates and becomes worse and worse. Now, he's not the only cause, as I mentioned earlier. There's not a one-to-one. He's not the only cause of this problem and the way things are bubbling up in the market. There's usually multiple things, and the Federal Reserve also is to blame. So, keeping interest rates so low, it doesn't allow you to pay off your debt. So think about it this way. Why would anyone, as a regular person, rack up $100,000 credit card debt if they're only making $15,000 a year? It's just so difficult to pay that off, and that's what the government is really doing. Now, granted, the government can keep printing money and those kinds of things, deflating things. The numbers are just so much bigger. But this is what ends up happening, is that in order to really have pain in the economy, because we should have some pain in order to pay off our debts, because this is what the U.S. is doing. It's just a lot of people in the U.S. are just living credit card to credit card debt. But in order to do that, you got to raise the interest rates. A lot of people need to be buying less expensive vehicles, less expensive smartphones, need to be living probably on soup, rice, and beans and those kinds of things. And then you can afford those kinds of things. But here, if you're trying to all of a sudden, hey, make more money from China and these trade tariffs, now this creates, a lot of problems going back and forth, kind of fighting with one another. And this just raises and escalates things and makes things more expensive. So usually you don't win these things out. And in the end, it just ends up hurting the consumer in the long run. There's no real benefits that the U.S. Gives to the people when you compare to other developed nations, as far as when you look at education, healthcare, maternity, or even paternity benefits. Looking at, Sweden, Canada, those kinds of countries, they have a lot more benefits. Now, granted, they pay more in taxes, but this is what you need to do in order to pay off debts, right? The U.S. doesn't do that. So anyways, the market is whipsawing due to a lot of this talk and what happens. And Trump himself and many other political figures, like now look at Larry Kudlow, they whip back and forth saying one thing, then going in another. And looking at some of these things, You know, you look at here a headline, Dow closes more than 200 points lower after Trump's taunts Russia because of the Syria issue. And then again, looking at it here, what is it, today here, as we start looking at things, you know, Dow gains more than 350 points after Trump says Syria attack may not be imminent. So it's kind of playing this potato back and forth, and the market's going to whip around like this with the volatility because it's biting and it's trying to hang on, trying to figure this crap out, when really, in reality, they're just beating you around the bush and none of it is really panning out exactly as they say initially. So normally, if you ask a hard-working person, hey, what are you going to do today? You know, what are you going to have for dinner? They're going to tell you steak and potatoes, or they're going to tell you barbecue chicken and corn. Then that's what's probably going to happen. Here, when it comes to these political bozos, you got this whipsaw action back and forth, and they can't give you a simple answer. That's the problem. That's the issue. So we have a lot of this volatility that happens going back and forth because nobody can give you a straight line with a simple answer of what they're planning to do. So when you look at the market, you've got all these volatility moves. When you look at the stats in this chart, here's one from CNBC. I mean, you can go ahead and verify it if you want. I mean, for me, looking at the charts is pretty obvious. I don't know if the numbers are exactly accurate, but look at the numbers, look at the charts, and you can do your own due diligence. But absolutely, we're getting way more 1% moves. Now that includes up and down on a day-to-day basis just over the last couple of months. And when you compare that, look at what this lines up to. It's 2008, 2009, 2010, 2011. You're getting into recessionary times, bear markets, and especially if the Federal Reserve continues to raise interest rates. Well, it may not happen this year, but you're getting into a recession, and usually a recession is announced 1 to 2 years after it's already happened. So anyway, so this is kind of the trouble with the market right now, is that we're kind of tight on the upper end. We're a little extended. There's a lot of political risks here. There's a lot of tension, and these politicians, they can't give you a clear-cut answer because Trump himself, he doesn't know what the heck he's doing. A lot of these other government people in there, they won't give it to you straight. You know, I fully understand that a lot of them are a lot of wishy-washy things going on and happening. That's fine. That's their industry. But the reality is most of them should be in somewhat of an alignment and a congruence. But here, we got way too much whipsaw action as far as what's going on behind the scenes, and it's probably not even half of it. So what you need to be prepared for is basically, when you're looking at your money, is to stay lighter and wait till things calm down, and meaning the marketplace calms down. Okay, so that includes when tensions calm down. You know, the fact is going back and forth like this with the lies, the lawsuits, the news, the fake news, that's going to continue going on for quite a while. This is what's in people's minds psychologically now, in their mindset, right? So we have now behavior within and in the public that this is what they believe, what they think, and all this goes back and forth. For you personally, you need to understand that, hey, let's calm down and do lighter trading when we have more volatile times, because you don't know which way things are whipsawing, because people are on an emotional high and it's whipsawing back and forth. Now, we've had the Zuckerberg testimony here, and stocks rally because of this. So also with the China proposal to reduce the auto tariff. So again, it's just whipping around. And when you look at overall here on the S&P, look at the range here that we're moving, all these whipsaw 1% moves. We're whipping the heck around everywhere. And when we start looking at some of the bigger companies, here's the thing. I want to simplify this for you. In a bull market, when you have stocks that are moving upward very strong, you want to see strong moves to the upside with wide price spread. You want to see it continuing to move higher with volume and strength, right? So when you look at this, right, when you see this, let's say, forget this downward move on an Amazon, a stock like Amazon, I would bet most people agree it's a strong company. But when you see it moving like this, and this is still about a 100-point move here and there, about 100 point, let's just say for conversation's sake, 100 point, but the volume is declining on the upward move. So why is the volume as we move upward declining? And here we have a gap, by the way. So when you start looking at the technicals and the numbers, forgetting all this noise, let's just forget all the noise that's out there. Let's just look at the numbers. Well, when a stock that's strong and powerful, wouldn't you want to see it going up with more volume? Typically, yes, that's the case, but we're not doing that. Now, we got a counter trend bounce, which is fine. Can you trade it? Yes, you can trade it, but would you want to hold it and invest it for the long term? For me, I'd be a little more cautious. I'd buy the dips, hold it lightly. It's a couple of day swing trade, and then you're out, right? Because you don't know if the next day you're going to get one of these whipsaw Twitter things coming out and the stock is down 5%. So who the heck knows? So that's why you stay lighter. You go wider if you're trading verticals, lighter positions if you're trading calendar spreads and options. You be a little more careful and nimble about the situation. So here, when we look also on Facebook, the same thing. You look at this move, these moves that we have. Now here, I'll give it to them that we do have some volume that came in, but this was of course due to the testimony here that's been happening. But overall, you look at the technicals, this is the line. This is the line that we should have been going on. And, we accelerated that trend earlier, okay, moving a little too fast. But is one bar a trend? No, one bar is not a trend. So when you look at this initial first bar of volume, is starting to show you that there's some bearish indications there. Now, can we get a little bounce here and roll over? Absolutely. Now, can we get a bounce and hold this for the next couple of months? Absolutely. So you need to just be looking at this and saying, well, now we're not moving at this accelerated pace, which on one hand, that's a good thing. On the other hand, we're reducing and selling off. So is this going to create lower highs? Okay. And then are you going to get a pullback here in this downward direction? That's a thing to be concerned about. And that's why the market pulls back, is when there's things of concern, whether that's Twitter announcements or feeds from the president, whether that's, looking at federal interest rates, whether that's looking at China and trade wars, any kinds of things, missile crises, all these things contribute to fear, panic. And that's why when you're at these cusps, at these key levels of support, if those things don't pan out well and they break through and they violate that becomes a little more risky. So be careful in these times, and let's go over a few more charts. So let's take a look here at Tesla. When we look at Tesla and you look at, let's say, a longer term, this stock broke out, came back, broke out, moved sideways for quite a long time, couple of years. We finally broke out again, and then we were in this descending kind of triangle pattern, and then we broke down right there on accelerated volume. Now, if we start zooming in a little bit, you could see it tried to get back above it, right? So we had this big green bar on the moving average, tried to get above it, above that 300 to get back into this range. But we couldn't do it. So again, we're trying to get back under it. There's trouble at this level. If it can't hold above 300, that means this could pull back. So let's say this stock pulls back to the 250. Let's say Facebook breaks down right here at the 150. Let's look at Apple right here. If it starts rejecting 180 or 175 and it starts to pull back a bit, when all these stocks start moving down together, this is what creates a lot of negative movements in the marketplace, and that's what can accelerate things a lot lower. Let's look at Alphabet or Google really here at our $1,000 level. Look, we're just having a couple day bounce here. But if this starts rolling over, look at the bearish volume here right there. If this rolls over and we get back, 900 level, that again could create a market rollover. So when we look at the S&P, your key line in the sand right here is about 2585. That's kind of the key, 2580 and 2600. So this whole range, and you're not just looking at those numbers, looking at this range. That range is your key support right now. But this market has had some trouble getting above this, call it 2675 level. Now, can we get above it and fill the gap over here a little bit? Yeah, absolutely, 2700. But do I see this market this next month or two getting into 28 or 2900, or let's say 2875? No. I mean, probably what we'll do is we'll bounce here, we'll probably pull back a bit. If we go higher, we could do something like that. But you still will probably get, again, a couple of nasty pullbacks, because volatility all of a sudden isn't going to just go from 20 to 10 within a day. It just doesn't happen. So be very careful here as you start looking at things, and you start looking at companies like P&G. Yes, these are the more safe companies. Right here, the 80 though is a problem, because you could see we got into that 93 level, rejected it, 85, 80, tried to come up, and it's struggling. The bearish volume right here, when you look at it, it's picking up. You know, you start looking at these kinds of companies, Colgate, Palmolive. These are the safer bets usually, but they're not popping right now. So if all these things are starting to move together, you know, then you're going to see a more major nasty pullbacks. But these companies like P&G, Colgate, Palmolive, these are usually more safer bets and safer plays, like Campbell Soup, because they do better in recessionary times. But usually they don't start picking up till the rest of the market sells off, right? So it's kind of like the market lags the leaders. So the leaders usually will go first. If you're looking at Amazon, Facebook, Apple, those kinds of companies usually sell off first. And then you get the P&Gs and all those things. But then they also pick up speed as far as buying happens, because people jump into those as safer plays. So they start working a little bit on an inverse basis with time. So let's take a look at a few more here. Look at McDonald's here, struggling here at 165. If you look at, let's take a look at Netflix here, also has been popping fairly well here. But again, when I look at this, you did have a couple of 1 or 2 days here, the volume starting to pick up, but you know, is it extended? That's kind of my question, is when I look at this, is it extended from where it was? And I would say a little bit. You know, 1 day pullback might be good, a couple day pullback, and then you'll see what happens, you know, because you'll see how the digestion plays out. When the pullback happens on any of these stocks that have been running up for a couple of days, how strong does it get bought out? And right now, it's not super strong, right? When you look at kind of Facebook, yeah, you got this testimony here that happened and you had a lot of buying, but before that, you didn't really have strong buying. And the same thing when you look at Amazon. Yeah, when you had the buying coming in, it was not super strong, right? I mean, you had some buying, but it wasn't strong or anything major. So this is why when I say these things, you want to be a little more careful overall at the market, what's going on and what's happening here, because what's coming in, when we look at this, look at PayPal, the volume is decreasing as we head higher. That is usually an indication of bad things. It's not healthy. If we draw out a little chart here, let's just break apart a little chart. Normally what you want to see is in a healthy movement, let's say here is our upward pattern, we want to see, if this was healthy, we want to see big volume bars, let's just say nice big volume bars on the way up, and on the way down, you want to see light volume bars, right? So that would be our kind of that pullback. And then again, as things pick up, you got big volume bars, okay? Now, what happens if the move is not real? Well, if the move is not real, well then what happens is that you have right here, you might have some volume, right? But then you have bigger volume right here to the downside. And that's what's in control. So what's a real move when we look downward? Well, here we go like this, okay? So now, okay, so we move down, we have big volume bars, okay? And then on the way up, this is our retracement, right? We have lighter volume. So as you have lighter volume on the retracement, and then again, as we start to sell off, you got bigger volume, right? This is what, you know, when you look at it, bearish. And when you compare the current charts, are you seeing this or are you seeing something else? Where is the bigger volume? And that's what you really want to look at. So for me, what I'm seeing is as I'm watching these shorter term, and I'm talking, a couple months here. I'm not talking about, years here. We're talking recently, right here, the volume is declining as we move higher. Otherwise, we're a little bit high on the volume as we sell off. So to me, I'm seeing that this right now is a retracement leg to where we could get further lower prices. At least this is what I'm concerned about and what I'm cautious about. My goal is to share with you insights and information that I'm cautious about. Not so much to tell you, hey, this is going to be the best next stock that's going to dominate and give you 10 times your money. It's more important to recognize where you could get into trouble in the marketplace so that way you could avoid a lot of pain. You will have pain in the marketplace. It's part of it. You will have losses. That's just part of investing. It's part of living life. You'll lose money. You'll waste money. Money is part of the flow. But if you can learn to avoid the biggest pains, then at least you'll be on a better side. Anyways, thank you so much for joining me in this week's video. I hope you found it helpful. Go ahead, subscribe to the YouTube channel by clicking the button right here, or subscribe to our newsletter so that way you get announcements when new courses or new books are released, or join our membership program at criticalcharts.com or tradersfly.com. Thanks again, and remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.